Happy Friday, Eric Bible with the Bible team at Neil Home Loans. Hard to believe that it's already November, and also hard to believe that rates are yet again above 7%, something that I was really hoping not to have to share ever again. But unfortunately, as we start off this Friday morning, the 30-year fix is up to 7.09%, which is up from last week's 6.92. And a lot of the questions that we're getting, which I know you're fielding the same, is how do we advise clients in this volatile, shifting market to where it's still we're able to operate with integrity and adequately guide and provide support to our clients through this market. So really this week I want to cover on, one, what's driving rates, where we see rates going from here, but also how we can advise and guide our clients to make the most informed decision. Now, as we know, the election is next week. And as I've reported over the last few weeks, as you're likely seeing throughout the media outlets, it has spurred a tremendous amount of uncertainty, which in turn has fielded volatility, which is really kind of the guiding light, if you want to call it, as to why we're seeing rates do what they do. Now, the expectation is and hope is that after the election, we're going to see some tempering of volatility. At least we hope. But obviously, we'll share that information as it comes in live time. Now, that's all well and good, but ultimately, then how can we deploy this to our client base to ensure that they're informed, but also empowered to make the most informed decision on such a large financial commitment? And one of the components here, and really as a seasoned mortgage professional, you as seasoned real estate professionals, you also understand that in a volatile rate environment, when rates go higher, we start to see one, affordability come out of the market, which pulls competition and buyers away from the scene. So that again placates the question that now and in moments like this create unique opportunities for our clients to get in front of the market demand. Now, on the flip side of that, we also know in a declining rate environment, that same volatility on the opposite end also brings more interest, more competition to the market. So, the best guiding principle we can provide in moments such as this is, in each paradigm and in each situation, opportunity is presented, and it's how we take advantage of that opportunity. Now, as far as the rate itself, we've seen over the last 2.5 years, as rates have risen, they've also come down, albeit they have not hit all-time lows. But rewind just 30 days ago, we were talking about rates in the low sixes. This time last year, rates were in the low eights. Yes, they're above seven, but we've also, through that period of time, individuals that decided to enter market and purchase homes have been able to reap the benefit of the volatility down. Now, the best guidance we can provide our clients is if the timing is right for you and your family, and ultimately the individual needs to make that decision, strike while the iron's hot. Get away from the competition and enter market now, where competition may be less restrictive, less competitive. We can always restructure the debt at a later date. With that said, if you're struggling in conveying these ideas and concepts to your client base, we'd love the opportunity to support. Feel free to reach out anytime. As always, let's make it a great Friday and an even greater weekend. Thanks again.